Hey, what's going on guys? Thanks for checking out this video. In this video, I'll be going over the indicators I use, how they work, and why I use them. Okay, so I'm just bringing up my TradingView. A lot of you guys will use TradingView in the browser. TradingView actually has a client, so you can just download TradingView. It looks the same, but just so you know that I'm not bringing up the browser, so just in case those are wondering. So I have four indicators on this chart. So I have the Stochastic RSI, the normal RSI, and the TDI GM, and then all the moving averages. This is under an indicator that I edited. So what I'll do is I'll give you guys the source code for this so that you can just copy it and you'll get exactly what you see here. The colors will be different, but again, similar to the last video, we just go in and change everything on the style to how we like them. Okay, so what I'm going to do is I'm going to go over the Stochastic RSI and the RSI in ones. I'm just going to bring the Stochastic RSI down. Okay, so typically what the Stochastic RSI is, it's a momentum-based indicator that measures recent price action to determine overbought and oversold regions. Um, these regions will often signal reversals. So when we get into these areas, typically price action is going to look to move up, and this is relative for for the time frame that you're on. So for example, on the daily, this will look different to on the 1 minute, right? So the 1 minute will be very similar in terms of, hey, look here at this point, we're going into the oversold region. So what we look to do is we look to wait for it to start to bottom out completely, and if you could get in here, you're looking to make, and this is just on RSI, no other thing. At this point, it's reaching the oversold region. So typically, a lot of people do use just a stochastic RSI to find, hey, if I sell here and I buy here and I sell here, typically on most time frames you will make money. I don't like to use just one indicator to determine, hey, let's get into a trade or out of a trade. But what I do like to do is I like to use the confirmation from all of my indicators to say, hey, now is a good time to get into a trade, and then that determines when I'm going to look to get out of it. So stochastic RSI and RSI slightly different, hence the reason they look different. RSI is also a momentum-based indicator, and believe it or not, stochastic RSI is actually RSI with another indicator and formula built into it. I don't want to go into the complexity of it, but what I find is stochastic RSI is better for ranges, and RSI is better when you're trending in a direction. So, for example, we're in a downtrend right now, and what we'd look to do is we'd look to break this. Hey, look, we're oversold here, and look, now it's going down and down, and now we're getting this upward move to say, although the price is moving down, we're getting this upward move to say, actually, price action from an RSI perspective is moving up. Obviously, you can't choose one indicator, so hence the reason we have multiple indicators to determine what we're doing. So yeah, so I hope that kind of summarizes it. I don't want to go into too much detail to bog you down, because in the later videos what I will be doing is I will be going into in depth of how I use all the indicators to get into a trade and what I take into account and when I take it into account. So those are the two RSIs, right? So I'm just going to move this RSI back up. And this is the TDI-GM. Again, this is a highly complicated indicator, but in a nutshell, the reason I use this is because these volatility bands are, when price gets outside of this zone, price is very volatile. So price action outside of these zones will happen very fast compared to inside the zone. Price inside the zone is relatively slow, and then when price gets out, it shoots up. Hence here, look, right? We're coming outside the volatility zone, and we get this nice big candle on the 1 minute, albeit not very big when it's relative to the 15. But if you look here, we've come from the bottom of the band out to the top, and we've gone very volatile very fast. So what I use this for is, if we're in this zone, price is likely to go up faster, and if we're in this zone, price is likely to come down faster. Hence why, again, price has dropped out into the volatility band here from a downward perspective, and price has gone down 1.5%. So I use this in confirmation with these to say, hey, this is a good time to get into a trade. And again, this chart here has all these lines on it. And just so everyone's clear, I don't change any settings on these on these indicators. These are completely standard settings. So these are the inputs I use, just so everyone's clear. I do not edit these inputs in any way, shape, or form. The one thing I do edit is this indicator, and this indicator is actually it's actually a crypto moving average indicator that I edited. So I will have to find the exact one, but what I can do is I can link the source code in the description. So those of you that do know how to add indicators, and what I'll do is I'll try and find a video for you guys on how to add indicators based on source code. And what you'll be able to do is you'll just be able to copy this in and then just pour this onto your chart. But what all these lines are, they're all moving averages. So for example, if we head over to the side here, it will tell you that the cyan color is the 20-day moving average. And when I say 20-day, it's just out of habit because typically I use these on the daily the most. But these are relative to the time frame you're on. So for example, the 20 moving EMA is the price action from the last 20 candles on the time frame you're on. So the price of the last 20 candles on the 15-minute right now come to 34,487.26. So that's the price. Why are these important? So these moving averages typically act as support and resistance. When we're under them, that they act as resistance. Hence why right now here, the 5 EMA we're getting rejected. We pushed up to the 50. We had a nice little rejection, and now we're getting a nice little rejection on the 5. What I use these moving averages for is to figure out, hey, when we come really far away from the 200, what direction is the 200 going in? So right now we're in this upward momentum on the 15-minute, but then if we go over to the hourly, it's also looking to go up, but recently it's just come out from that down. So what we'd look to see price action take a nice growth upwards. However, these 3 hourly candles suggesting that we're going to come down suggest that we may look to come down towards the 200-day moving average, which right now is a good 1.5% away. So for people that scalp, we'll come onto trading techniques, but typically I use these moving averages in confirmation between the other indicators to say this is a good time or a bad time to get into a trade. So what I'm going to do is I'm just going to go over exactly what I use these indicators for and at when I use them. So for example, if I'm looking to take a swing trade, I'll go onto the hourly. So again, I will say, hey, on the hourly, the Stochastic Rsi was saying that we were overbought up in this region. So this is saying that we were overbought in this region. And what's this saying? This is also saying that we were overbought, and the TDIGM is also saying, hey, we come out of the volatility band, we've come down, we tested this, and we went out, and now we're testing the market baseline. So what I would look and say, we're currently fighting to decide which direction it wants to go. It could go sideways for a little bit, but what I expect is this is let me just take this magnet off. This is saying actually it's coming down. This has also been lost because price action is below it already. So what we're looking to do is we're looking to either find support or lose support at the 20. If we lose support at the 20, you can expect this price to come down, cross the 200, which would then signal that we're probably going to push away because this will then get the 50-day EMA will also get taken. So I use those. So right now, what are these telling me? Hey, we're probably going to look to go down into this overbought region, oversold region. Sorry. RSI is also RSI is also pointing down, so that's suggesting that we're probably going to head down for a little while. And then also we're not in any of these volatility bands, so price action could be very, very slow. Moving averages. I have the 800-day, and again, I can turn the 800-day off and on. 800-day is nice because the 800-day on the hourly is the 50. No, it's the sorry, it's not on that time frame. It's this time frame. Apologies. So the 800-day moving average on the 1 hour is the 200-day moving on the 4 hour, and the 800 moving average on the 4 hour is not on here. It's not correlated to the 1 day. So I use this to say, hey, actually, if we were to push up from the 1 hour and cross the 200, what actually that is that's us crossing the 200 on the 4 hour. So that's the reason I have the 800, just in case everyone was wondering. It obviously is, price action is quite often far away from it. When we do try and gain it, we often get a lot of back and forth pricing, hence the reason we get it here, and we also get it up here, right? We get this price action of just going up, down, up, down, up, down, and when either we have to gain massive support off of it, or we typically lose it. So that's what I do from the moving averages perspective. But just to bring us back down into the recent price action. So price action is telling us that we're going to go down. Let's look back and back test this a little bit and say, hey, what happened when we entered the oversold region before? We got a nice spike up. Sorry guys, I just sneezed. Okay, so that was there. That was there. What happened here? We had a nice test off the market baseline, and RSI took a nice steep up. So I'm not going to come on to trends and resistances because at the moment I'm just simply going over my indicators and what I'm looking for and how I use them. However, there is one obviously key thing, is that I'm not getting into a trade until I do any technical analysis on any of my charts. So I hope that gives you a good overview of what the stochastic RSI is, and I would really promote you guys to say, hey, go back and test them, because when we're, for example, here, this is probably not a good time to get into a trade. Why? Because although the stochastic RSI is completely bottomed out, it's at 0, actually the chart was telling us that it went down. Well, could we have determined at any point that this was a bad time to get into a trade? So this came down very fast. What happened? We got some nice price action here. RSI came down, but RSI was still is in the middle. And what happened here? Market baseline got completely lost here. So this market baseline suggested that we had a lot of room to go down here. And again, what happened? We went down. So the confirmation of these two says, actually, this right here was not a good time to get into a trade, for example, a short, because our other two indicators were telling us, hey, there's a lot more room in this to go. What happens when we got down here and got down here? Hey, price took a nice increase. Sure, it went down a little bit. What happened? We got divergence. Fine. But then what happened here? This started to pick up. Then we started to go into an upswing. Again, we got into the oversold area. What happened here? This got up here. This got rejected from the market baseline, suggesting that we were going down, and RSI then picked up. Okay, so again, obviously, I am talking out loud in terms of doing some technical analysis on these charts, but what I wanted to do is give you an overview of what the stochastic RSI is and why it differs from the normal RSI, and hopefully we just went over that, and what I use the TDI-GM to do, and how price is impacted from the moving averages. And just to go over the moving averages once more, again, the moving averages that I do use are the 5 day, the 5 moving average, the exponential moving average, sorry, EMA, 5, 13, 20, 50, 200, 800, and I use the 200 as a baseline for majority of my trades, hence why there's lots of colors on here. I can disable them in here, but I have them just because at a moment's glance I can look if we're above or below the 200 moving average. Okay, so what happens when we push above? We find support, and then what happens? We typically lose the rest of the moving averages. So some people have heard me refer to it as a fan approach before. So typically, when we get some violent price action, the moving averages go into almost like a fan, right? And what happens when it does? We get the 50, the 20, the 13. Sorry, that is not the 13. The 13 and the 5. So what happens if we were to zoom right into this, and we can see this in real time, is, hey, We gained support on the 13, and then we lost all of them. We came into this range, and then we had all of this price action. Why? Because we know we're on the 800 EMA, so there's a lot of price action here. So let's have a look. Let's have a look here. We lost all of these. We broke through the 50, and we went down. Now we're fighting against the 5. The moment we capture the 5, we get rejected here, and then we come all the way down. What happens here? It tries to go above the 50, rejected all the way down. So we're still fighting for this moving average. What happens? On this candle right here, we gain the support of this moving average. So then we look to take out the next moving average. What happens? We then get rejected. Then we get this very clean price action above the 50, very clean price action down, and we typically consistently fight with these moving averages, because when we move above them, they come into they become support, and when we're below them, they're resistance. And I'll come on to support and resistance in my next video. My next video is probably going to be a more in-depth video, because it's going to be more technical analysis and an overview of what support and resistance is, how we can determine market strategy. Market strategy. I meant market structure. Apologies, guys. But our strategy for a trade. So guys, I hope that was a good overview of the indicators I use. As always, if you have any questions, please leave them down in the comments. And as always, trade safely.